Welcome to Option Trades Today. I'm Tony the Bat Batista. I have a trade idea for you today. February 22nd, 2024. And let's see what's going on with the market first. Even the S&P's up $80.50. Wow. That's a 1.5% move. Equally, if not even more, the NASDAQ is equally surprising for me, up 435 points or 435 handles. That's a 2.5% move. Russell can't get out of its own way, but it still is up $10. A more normal 0.5% move, and the Dow doing the same, up 260. Really, what's moving this market today, if you haven't been watching, go to the upside here. NVIDIA up $103. SMCI up $160. Look at the IV rank over the last 5 days after NVIDIA comes out with its earnings. The IV rank, or the IVX 5-day change, the implied volatility's movement is coming lower, down by 25, 15, 16%. NVIDIA still actually has decent IV rank. I'm going to stay away from NVIDIA today and stay away from all of these stocks that are moving like this, quite frankly, because you know what? I have enough of them right now in my portfolio. So what am I going to take a look at? Well, let's go back to that to the watch list here and click on BABA, BABA. BABA down 7 cents today. An IV rank of 24 is good, not great, but it is a lower price stock, $75 stock. And if you go down here all the way through, you'll see that over the last 5 days, even though volatility is down almost 30 cents today at 14.75, and even though volatility is on its lows, BABA volatility has been staying up relative. Now, is it a great setup here? No, I don't think when volatility is this low, you're going to find a great setup in anything, unless some of these high-flying stocks that I just named a moment ago. Let's put BABA back up there for you. BABA, where are you, my friend? There you are. Down around 1.7% over the last 5 days is the IVX 5-day change. This is how the implied volatility has moved over the last 5 days. So it's staying relatively the same over the last 5 days, down small, IV rank of 24. BABA, unlike the market, correlation and everything else is uncorrelated to the market. So we just did a piece today on a market measure that shows how you have an uncorrelated portfolio that actually smooths out your volatility curve of your overall portfolio. So this would be one where if you've had a portfolio that's made up of a lot of NASDAQ stocks moving in one direction, BABA might be something good for you to put on. That's the Alibaba group. When I say BABA, it's up 5 cents now. It's basically on its butt. You can see volatility coming in here after earnings, but still staying bid at the higher end of its bid volatility bid range here. What am I going to do in BABA? Well, I'm going to do a strangle, but I want to caution everybody else out there. If a strangle uses too much money, now this is a $75 stock. You'll be hard pressed to find a lot of other stocks that are very liquid. Look at the markets in here: 1 penny, 2 penny, 3 pennies wide. In a lower price stock like this, to have good implied volatility, almost a 40% monthly implied volatility. When you look at something like Apple having a 20% implied volatility, this has twice the volatility of Apple, at least twice the juice too. What am I going to do here? I like to go to right around that 20-ish delta, but you'll notice here there is no 20-ish delta in April. We use April options because 45 days is the closest. It's the optimal range for us, and we roll at 21 days, meaning if I have a March position, I would be taking that position off in March and bringing it out to April. We trade the monthly options. We do not trade the weekly options. You'll notice here, these weekly options, they go from the markets I just showed you, a penny, 2, 3 wide, to here's 50-cent wide market. Here's $1 plus wide market. You can't get a good opening trade. You don't want to be the only one trading in there, and plus you want tight liquid markets. Here you'll see that the markets are very tight. So since I don't have a 20 delta option, I'm going to default to the 25-ish delta option, or I'm not going to go down to the. I don't want to sell something for two options for 60 some odd cents. You go to the upside here, and you'll notice here that the delta also is 25. I'd have to go up to the 90, and I'd be selling $1.57. I am using $1,600 in buying power here, but I'm going to go a little bit tighter. A lower probability of success, around 65%, 64%. I'm going to sell the 70 put, 85 call. I actually did it for $3.33. Little known fact, I was born on 33rd Street in Brooklyn, though there's $3.33. Means nothing to this video that I'm doing, but fun fact. 64% pop. The theta, meaning how much I'm getting each day for my risk. My risk is the $2,000 in buying power. I'm getting $6 a day in theta decay. It's basically delta neutral. It's one actually long delta here. My max profit is obviously what I sell it for, $333, and I'm using about $2,000 in buying power. Now, if you're in an IRA account or something like that, you'll be using $6,000 or $7,000 in buying power to put on a trade like this. So it's very easy to define your risk. You go out and you buy a wing. I like to buy it around that $2,000 difference that we were just looking at a moment ago. So you could go up to, like, let's say the 105 put and down to the 105 call and down to the 55 call, and you'd be using actually the same or less buying power than you would in a margin account. It's just a nice way to simulate. This is what I like to do in my own IRA. I like to simulate the buying power when I'm doing a trade. This would be a synthetic strangle. When I'm doing this in my IRA account, I like to use around the same amount of buying power, maybe a little bit more. But here you are being able to just buy the wings, defining your risk, but still your probability of success is the same. The amount of money you're using is the same. Obviously, the credit you receive is down by about 30 cents or so, but that's the price you pay for freeing up, $5,000 in your account, and also being able to use that money someplace else. It's just maximizing the amount of money that you have in your account without actually adding any money to your account. So that's a little trick that I like to do. I like to simulate the buying power of a margin account in an IRA account or any other account that I'm using, maybe even a smaller account where I can't, afford to put on a strangle in, using that kind of trick, just making it an iron condor, or just going out wide, making it a synthetic strangle. All right, everybody, this is the time of the day when I ask you, help us keep the lights on here. Open, move, transfer your account to Tasty Trade so that we can provide a lot more of this great programming for you.